Welcome to FT Markets. The US Federal Reserve is widely expected to raise official interest rates this week for the first time since the financial crisis. If it does, then emerging markets, which have attracted trillions of US dollars of inflows during years of US easy money policies, could feel the pinch. With me to discuss this is Jonathan Wheatley, our Deputy Emerging Markets Editor. When we think about the Fed tightening, which probably will happen this week, what do you think the main impacts will be?
Well, the immediate short-term impact, if it does what almost everybody thinks it is going to do, could be pretty much nothing. There's never been perhaps such a wide consensus that the Fed is going to embark on the loosest tightening cycle in its history, a very small 25 basis point hike to start with, and then markets are expecting 2 or 2.5, if you can expect that many, more hikes altogether through to the end of next year. So if that happens, if there's no surprise, then markets should take it in their stride to start with. The big issue will be, A, if something other than that happens, which is unlikely, but B, even if that does happen, how that's going to work out over time, because although the immediate short term is very much priced in and quite clear to a lot of investors, what happens next is a lot more doubtful.
And one of the big issues facing emerging markets is this issue of debt. And if we look at the debt burden across emerging markets, we see a huge concentration in the private sector.
Yeah.
How will Fed tightening impact emerging markets through this prism?
Well, I mean, one way that it would affect is on the dollar-denominated debt among that pile. That's built up very significantly since the crisis over about the past decade. And that would be affected, obviously, if US interest rates rise, then the cost of servicing that debt, if it's in dollars or other foreign currencies, rises too. But a lot of this debt, much the larger part of it, as much as maybe 90%, is in local bank lending and other forms of local lending, non-bank lending. A lot of it, the big worry, what makes it concerning, is that a lot of it is not even identified. And we don't really know. People are starting to talk again about the debt overhang in emerging markets, which is something you used to hear back in the 90s when there was the big sovereign crisis. This time it's all in the private sector. And the idea that there is this accumulated mass of, to some extent, undisclosed debt has got people very worried about what happens when, as the Fed starts to tighten, global financing conditions tighten as well, and then what happens to all the companies that are doing as much as they can to keep their businesses running in a situation of falling demand, oversupply, and then their debt costs start going up as well. What happens then?
So that has exerted a bit of a squeeze on emerging market companies. And if we look at the next slide, we can see the way this leverage has been depressing profits. How do you expect this to work out? Well,
what we've got there in the blue line, we've got another representation of what we saw before. This is the debt-to-equity ratio of the companies in the MSCI Emerging Markets Equity Index, the benchmark equity index for EMs. So we see the debt going up and profitability coming down. So if you were borrowing into a boom, if you were borrowing lots of money and it was becoming productive and profitable, that would be one thing. What we're seeing is the opposite. So debt service costs are becoming a burden, profitability is going down, and the whole thing starts to get into a more vicious rather than virtuous cycle.
So we would expect to see the earnings of emerging market companies, decrease even further.
We are the global situation is that, as I said, the demand is falling, supply is excessive, so the ability of a lot of emerging market companies to generate more profits is becoming more and more constrained. That makes those debt services a lot harder to meet. Obviously, if financing conditions tighten at the same time as all this is going on, then that's another very negative element for them.
Jonathan, thank you very much.